The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 7th thoughtful Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a wonderful Wednesday. Hey, let's make sure that we do everything we can to have an extraordinary Thursday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift out there, it means we can find the gift in every set of circumstance that life is going to throw at us. That's what we're going to do. We go take a look at these markets. I'm absolutely grateful for your presence here today. I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Together we can go take a look at some equity, some stock, an index, ETF, a currency pair, a commodity, whatever it is you'd like to look at. Maybe you've got some insight that all the tigers and tigresses around the world need to hear as well. Of course, internationally, speaking of around the world, you can call in at 727-445. 1044. This is terrific Thursday. Of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures off 27 points. They're trading at 17,750, well off the session low, which was down 149 points earlier this morning. If you were up in the wee bit hours of the morning, we've got the S&P futures off 2 and 7, almost about $3, trading out at 2,072. We'll call it. NASDAQ futures off 6 points, trading at 43.66. Russell 2000 up a couple of points as well. U.S. dollar index on the move to the upside. We're going to have to go check that out. That's up 340 ticks right now, trade at 94.52. So we got some movement in the currency market out here. We certainly want to take a look at that. The euro, I believe, running into resistance area that we identified last week or so. That area has been hit. Gold's back $8 right now, trading at 11.82. Silver is off 21 pennies, trading at 16.29. Light sweet crude back 21 cents, trading at 60.72. A quick peek across the globe out here. Welcome back to the Nikkei after taking some time off there for Golden Week out here. And let's go see, what did the Nikkei do last night? The Nikkei off 239 points, playing a little bit of catch up, but down 1%. Let's go take a look at the stock chart, see what the Nikkei is doing. Nikkei has busted through a swing point from back here on April 20th. You could actually say you got an A to B equals CD to the downside inside the Nikkei. If we were to look at that, not only could you say it, we can paint that in on the screen out here. Your A point, April 23rd high, your B point out here at April 27th, your C point the very next day, April 28th. It's made more than a 1 to 2 A to B equals CD to the downside. I don't have the 2.618 expansion out here. That's what it's doing lightning bolt wise out here. We take a look at retracements from the most recent low of April Fool's Day, April 1st, up to the high. It's made basically a 0.786 retracement level out here. So potentially the Nikkei, depends on how our markets trade here today, I would say, to determine what the Nikkei might do. One or two patterns are setting up out here. In fact, it's so close, quite frankly, to the swing point from April 1st out here. That high is 19,195. You got to say, and you got a 0.786. You got, in essence, a Gartley buy pattern out here. You got to assume that it's going to go at least test that swing point, and then maybe it decides to continue its move higher. A quick peek over in where do we want to go? Over in China. Let's go take a look at the Shanghai, off about 3%, a little under 3% last night, 122 points out here. Well, we know this is just doing a retracement from its large move up off of the February 9th level. Retracement here coming down, looks like with lighter volume. I do believe I'm getting accurate volume on the Shanghai out here. Has not even made the 0.382 retracement. 41.81 is certainly not out of the question. It closed at 43.08. A quick peek over at the Hang Seng. Over in Hong Kong, off 351 points last night, down 1 and 2 tenths% out here. Just still coming back into an area where this thing had broken out. So all in all, it looks pretty good, and that's the Hang Seng. Let's go take a look at what's going on over in Europe this morning. We've got the DAX. That is trading, where is that? Just trading up 30 points as we speak right now. Now, the DAX here certainly has been hammered away. It's made its way back to the 0.382 retracement. Almost looks like to the tick out here. The exact number, it looks like the exact number. Maybe this is even off, but let's just say the exact number out here looks like around 11. No, we won't call it exact. The 0.382 retracement area, how about that? 11,177, and the actual low, 11,167 so far today out here. Today, it'd actually be forming a little bullish engulfing candle if it could close right around or above, equal to or above 11,377. You're trading at 11,385 right now. We know this has been an A to B equals CD pattern as well. We've seen two of them, and that's really what you're looking for in the DAX with that strong move off of the bottom. It's really unfortunate that we've got this little unfavorable seasonal cycle in here. You would have loved to have seen this pattern set up during the favorable seasonal period. But nonetheless, this is a Gartley pattern that is trying to set up out here, and that's inside of the DAX. If we go take a look at the FTSE's struggling a bit this morning, struggling a bit yesterday, off 47 points. It's well off its session lows, but what it is doing, it continues to travel right now for the third day in a row, I should say, below that 69.50-60 area. That's an important swing area. That's the 1999 highs out here. That's where it's really trying to break out of a huge long-term consolidation pattern. Looks to be looks like a hammer, smells like a hammer. It needs to close up a bit more than at the 68.83 level in order for that to occur. Now let's go take a look at our markets out here, and where do we want to begin? Where do we want to begin? We want to begin with the euro. So we're going to go take a look at the euro versus the U.S. dollar index, because this is kind of cool. And it's kind of cool from the standpoint that you and I, we drew this pattern here together. It was your vibrations that you sent to me, and it was my fingers that were drawing the pattern out here. Let me just clean this chart up a tad. We'll go ahead and turn off a couple of tools just so that the lines on the chart look nice and clean for us. In fact, on this channel line, we don't really need that midpoint. We'll go ahead and we'll keep that in there. So here, beautiful channel line, and you did a great job drawing that, by the way. Take a look at how the top of that area has acted as a resistance out here. We've only seen really one close above it. We use this as a guideline, but look, we drew this pattern in here. I think you and I drew this pattern in here last week sometime, and we suggested that once the euro had cleared this little congestion area, which was around 110, it would run up to the top of that consolidation, the descending price channel. Our price estimate was in the 114 area. The actual price level, I guess I need to put on my data window to find out. It hit 113.9, 1.139. So that qualifies as hitting the 114 area. And since then, just knowing that it was resistance, has begun to sell off. Now, is the sell off anything significant? No. It's not. No bearish reversal signal. We just know that it's bumped its head up against our resistance. Now, the interesting thing here is this it for the move? Was this the counter trend rally for the move? And I don't know the answer to that, nor do you. If it breaks above this area, then the answer is that we can see a break of the trend, believe it or not. And that break of the trend, if we just come from that swing point from December 16, 2014, down to the lows out here, March 16, 2015, you can see what the euro did yesterday was widest ranging bar, getting beyond that 0.382 retracement level, which is a 112.65 out here. So I can't tell you which way the euro, I would, if I were a betting man, which I am, I'm just not betting on this currency pair right here, that the safer trade is to the downside, because we know this is a longer-term resistance area. So your back is up against the wall. The more conservative trade is the one to the downside. And what's easy about this is you don't have to have too much risk on this trade, because simply if you get any kind of close above that 114-ish area, especially with any kind of conviction, it's telling you that the euro is very likely headed to the 117 area. Now, where could the euro pull back to, retrace back to? I'd have to say, actually, that's why I left that purple line, that 50% area of that down channel. That would be a place that you would look, initial place that you would look for support. But that's what's going on inside that currency pair, which in fact will go ahead and start to have an impact on the euro Japanese yen, because you've got the euro as the The numerator, the Japanese yen as the denominator. Hey, mathematically, did I get that right out there? My daughter probably would tell me, Dad, if I got it wrong, because she is a math graduate, teaching. She is teaching high school math and everything. So in any event out here, if we take a look at the Euro-Japanese yen, it's also run into resistance at its 0.382 retracement level, which is $1.35, 135.14 out here. So that's what's going on inside that currency pair. Now, I'm going to say you and I, even though you know, how about that? That's just a horrible language, horrible grammar. Language is okay, but the grammar is pretty sucky. In any event here, as you know, we track the Euro-Japanese yen. I at least track the Euro-Japanese yen because of its directional correlation that it has inside the U.S. market. It's decided to ignore it over the last few trading sessions out here. And, it is always the Euro-Japanese yen that wins the battle. But look, if this thing starts turning down right here, that could be curtains for the U.S. Stock indices if it decides to go ahead and get on track. So at this stage here, I'm going to be a little bit, what's the proper word for this chart? I don't know. We're going to put this chart off to the side. The word, agnostic. Thank you. Thank you. I appreciate that. You knew what I was trying to say, and you helped me come up with that word. So I'm going to be agnostic with regard to this chart for the time being. And instead, what we're going to do is we're going to go focus on what I think is the most important set of charts out here today. In order to help you and I understand, are we going to have a bounce? Have we just put in a bottom with more than a bounce, or a bounce but a nice maybe 0.618 retracement? And those charts and that time period is voila. It's this. Hopefully you're watching this on TigerTV. If you're not, let me describe to you what it is that you're looking at. Upper left-hand corner is the S&P futures on the 120-minute time frame basis. Upper right-hand corner is the NASDAQ futures. It's also on the 120-minute time frame basis. Lower left, it is the Dow futures on the 120-minute time frame, and lower right is the Russell 2000, also on the 120-minute time frame. In my opinion, these are the charts for us to be paying attention to help us identify whether the route lower is going to continue, or are we about to see a decent retracement. So where do we begin the morning? Let's go begin the morning. Let's go from upper left to lower right. Let's go take a look at what's going on inside the ES Mini, the S&P futures. Here's what we know. If we take a look at the high, the all-time high inside of the ES Mini, that'll take us back to the April 27th time frame. The price out there is at 21.1975. So that's the high. A nice little bearish engulfing, a bear sash candle actually that formed out there. So that's our A point of our lightning bolt. We go from there and we take a trip all the way down to 2,070 and a quarter. That took place between 2 and 4 in the afternoon on April the 30th. Make a retracement, almost a full retracement, a 90% retracement. What we've done this morning inside the ES Mini, it's made a 1-to-1, 100%, maybe a little bit more than a 1-to-1 A to B equals CD. But here's the deal. I'm going to have to wait till we get back from the break. That means you're going to have to rejoin me in just a few minutes. This is Steve Rhodes with TFNN. Be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We had a request in the Tiger's Den to go take a look at silver. So as long as we had the music out there, we might as well go do that for you, for your entertainment out there. As we take a look at silver right now, we're looking at the July contract. It's trading out at $16.42. And as we take a look at the contract, we can clearly see along the top, just like we did when we looked at the euro-US dollar, we looked at that descending price channel. And these diagonal price channels, they have some meaning for us. And so we want to take a look at that. Remember, markets are either moving sideways, horizontally, up or down. It's one of those three choices out there, and sometimes it's a combination of the two. Sometimes it can even be a combination of the three because of those different little sub-correction channels that you can have with inside larger channels out here. But in any event, right now, what we can see with regard to silver is it's right up against resistance, just as is the case with the Euro-US dollar index. Any break above, any close above, let's say most recent swing high out here looks like on May the 4th out at 1676 would be a suggestion that silver would be trying to break out topside. It then would have to clear these swings back here at the price level of 1739. So that is what the silver contract is doing. Let's go back to that 120-minute time frame chart that we were looking at for the S&P futures out here now. What it's done, it's made a 1-to-1 A to B equals CD to the downside, just slightly more. Then as we came into the 8 a.m. hour out here, we had a nice, good old bullish engulfing candle. The market communicates to you and I, and if I were going to teach you how to buy and sell the D point, well, we got a signal to buy that D point out there. So we've got that confirmation. And come 10 o'clock in the morning, if we actually see a close that is at least above 2,069, you'd have confirmation of that pattern. So what does that mean? Well, look, we take a look at the market profiles on this chart out here. They're actually set up more from a bullish support standpoint. So it's a beautiful chart, and it's a beautiful time frame to really provide you and I with a ton of information. And that's what I'm trying to do for you here. Because if this pattern fails, it suggests curtains to the downside out here, because this is a pattern that should hold. You've got your market profiles that are in bullish configuration. You've just gotten a confirmation of that bullish engulfing after a little over 1-to-1 A to B equals CD to the downside. Of course, price has just only made it up to the 2,074-ish area, which is where we've got a lot of congestion. So the question is going to be, can it bust through that? And if it does, what we ought to see is a price move to the 2,087 area. Now, if we go ahead and we pull this back even further out here, what we're also going to see, oh, that's nice. I like how that does that on my charts. What we're also going to see is, what's the best way to do this? Let's just simply come from this swing point right back here, right around March 31st. So let me just expand it out just a bit. Let's take a look at the retracement. And so we come take a look at that retracement all the way up to the top out here. What we're going to see, it's basically been done a 0.786 Gartley buy pattern. And what you and I know is if any Gartley buy pattern, that's assuming that you like those Gartley patterns. And boy, if you don't, you really should. What that says to us is there's really 5 different outcomes that we could see inside of the ES Mini if this area holds. Now, what the ES Mini is going to have to do is going to have to break through resistance at the 2,087. So that's going to be our first target. But let's go take a look at, and I'm going to go ahead and get rid of that 0.786. Just going to try to clean up the chart just a tad for you. It makes it a little bit easier for you to see. You can see, oh, Steve, would you get there already? Okay, I will. If we go from that high out here on April 27th down to low that came in earlier this morning, what we'll see is that 2,080 is your dead cat bounce, your 0.382 retracement. So that says that should be a minimum outcome of this pattern out here. If that's all that it gets and then it starts moving to the downside, that's a real problem, because then you'd have a new A to B equals CD pattern setting up that could be muy grande. On the other hand, I would expect that we'd see price move into the 2,087 to 2,095 area, your 0.618 retracement. Now, I share all this information with you because, you know, each of you trade different types of time frames out there. And if you're an intraday trader out here and you were licking your chops when when the Dow was off 140 points or so this morning, if we go take a look at the Dow chart, we're going to see the exact same kind of pattern out here. And if we go take a look at that Dow chart, so we'll go do that with you. Well, I'm a little off kilter here. I mean, I'm going a little out of order. But if we take a look at that Dow chart, same pattern, AB equals CD, almost hits it to the tick. 17,637 was the exact number. What the Dow futures got down to was 17,629. You got to like that. Off by 8 points on a $17,000 vehicle out there. Makes that 1-to-1. Nice bullish engulfing candle that is out here. Price running where into that point of control, that congestion area, 17,790. As long as the lows aren't taken out, price here ought to bounce to 17,882. We'll take a look at where price could go to the downside when and if it takes out those lows from earlier this morning. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the fact, if the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 35 points, trading at 17,806. S&P off 3. She's trading at 2,076. NASDAQ Composite off a point. Russell 2000 up just slightly. DAX up 23 points. FTSE down 51. Gold trading back $3 right now. Silver off 16 pennies. Light sweet crude off 82 cents. To the upside, we've got Alibaba up 9%, up about $7 and with $7 and change. We've got Cuervo, not the Jose Cuervo kind that all of you were doing on Cinco de Mayo out there. Well, that's up a nice 10.5%, up $7. We got Quality. I don't know, what is this, Quality Distribution maybe? I don't know, QLTY. Boy, it's up 61%. Maybe that is the Quality Inns and Suites or something. What are they doing out there? Let's see. What do they have going on? Quality Distribution. They're going to be acquired, so that makes sense. That's why it's up 62% out here. Amazon's up $5. Yahoo's up a couple of bucks. Priceline to the down. Ooh, Priceline out with numbers. Now, Priceline was trying to make an A to B equals C to up pattern yesterday. Let's go see what it actually did out here. Did it ever get above that B point? And the answer is no. Whether it did or it didn't, boy, it's in the trading range now for sure. That B point was 1264. The actual close yesterday was 1264.15. That's not exactly taking a B point out with any kind of conviction. Volume was 1.2 million shares, which was going against 935, so it had the volume. Nonetheless, looks like they're out with numbers. Let me see if I can find them. See what? I show. I don't really show the numbers out here. Earnings per share are up, but I don't know what the top line numbers are. Nonetheless, the street is not digging it, but here's the deal with regard to Priceline. Yes, of course, depends on what volume does today, but this thing had, wide price spread, accelerated volume back on February 19th. That says that Priceline is now in a trading range of 1129.98 to 1264 out there. Oh, you know what I want to look at? I want to look at Whole Foods markets. Let me see. Is that on here? Yeah, Whole Foods markets for one of our Tigers. You may have heard the call a few days ago. I think it's Robert in Illinois, and he's been in and out of Whole Foods, and he had called me quite a while back when we were taking a look at Whole Foods. I think it was right around the November 2014 timeframe. I was looking for a trade idea. It was right before earnings out there, and there was nothing on the chart that indicated that it was going to take off, especially with this huge supply line that was in it because of the gap down on May the 7th. And but nonetheless, it did. And the advice I gave him was not to take a trade on it, and I was proven completely, undeniably wrong. So then I suggested when he called a few days ago that, hey, maybe you ought to do the exact opposite of my read on the charts out here. But he said, nah, I think he said, nah, he was not going to do that. What we looked at, because he was in the trade and he was in a nice profit position out here, what we looked at, and I think we had maybe some additional tools I didn't have the time before, is we knew this was in a downtrend, and we knew that this had support at 40.64 to 43.37. We knew that that was the original breakout area. That's the beauty of those gaps out there, because they're nothing more, nothing less than a wide-ranging bar out there. It's just visually we have to go ahead and fill that in. And so what you want to do is you want to buy those gaps when price is coming into with lighter volume. Those are typically an area of significant support. We haven't actually hit the bottom of that, which is 40.64. Do we have to? Not necessarily, but you'd like to see that window get closed out there. But right now, the window is more of an area of support until we see what today's volume comparison is like. Now, volume so far picking up 5.5 million versus 27 million shares out there. Nonetheless, the suggestion was because of the rejection of its profile low out here. That's our TAS market profile. We see a green line and a red horizontal. We don't see the blue. And what that means is that this area of support inside the TAS box, which is 48.67, becomes a formidable area of resistance since price had continued to reject that area. And so at this stage here, it's actually using those combination of patterns. Looks like we were able to make up for the horribly missed call back in November versus this call with the earnings that came in yesterday. That's what's going on inside of Whole Foods markets. Let's go take a look at Green Mountain Coffee Roasters. That's down about $11, down about 11%. They were out with numbers here after the bell yesterday. Let's go check in on its stock chart out here, see where this thing might be headed to. So this is also pulling back into an area where it had broken out with some conviction, and that was back on the trading day of February 6, 2014. Had volume, nice volume there, 32 million shares. So far today, down with 1.2 million shares. And this thing is coming back into the price area of 84.82. I suspect that that is a level that ought to get hit. Considering the gap down this morning, if it extends beyond that, well, we'll come back to it at some point if it extends beyond that. But 84.02 should be pretty decent support for Green Mountain Coffee roasters out there. Let's go see what else is moving out here. Let's go take a look at some things to the upside. Let's go take a look at Equinix, EQIX. That's trading up $9 and change, nearly $10, up 3.8% out here, either at an all-time high or 52-week high. Let's put this back on a monthly chart out here, just get a better feel for the time frame. Oh, nowhere near the all-time high out here. Oh, what the heck happened with this? So this is pretty wild. This must have gone through, I think this must have been a shell. This must have been a shell out here that these guys bought before they went public, because it shows the stock, if you're to take the shell, do reverse splits and so forth, I guess it gets you up to about a price level 520. I don't think that then there was no volume there, so we don't have to pay. So I'm going to say this is at all-time highs out here. Ticker symbol EQIX. On a monthly basis, let's see what it did on a monthly basis. It had a swing point back in February 2013 with 20 million shares, and that was taken out with only 13 million shares. What? I take that back. 28 million shares. That works. That works. So you've got a swing point that was taken out with volume back here this past March. So that bodes well. In fact, you take a look at just the conservative A to B equals CD on this. I'm just going to come down here into about the October 2011 time frame. You could go back a little bit further. I'm just going to give you a conservative number out here for where this is likely headed to over the longer haul, 301.95, and then maybe 342.51. But 301.95 looks like that should be a pretty solid price for EQIX. If we take a look at Bluebird Bio, BLUE, that's up about 7%, up $9 and change. Let's take this off of the monthly chart out here. This is also at all-time highs. Let's go see what it is doing today. So gapping up today over a most recent swing point. This thing has had a couple of signs of, well, it's had one significant sign of strength out here at the $73 mark. So this continues its route higher. That price point that it's taking out with volume 141.48, that had 608,000 shares. Looks like it should be no problem to take that out with some volume here today. We've got Amazon. Let's go take a look at Alibaba. Don't really look at Alibaba too often out here. BABA is the ticker symbol. That's trading up 9.8% out here. They were out with numbers. I won't spend any time on doing the math conversions for you for RMB but let's go take a look at it. Oof, this is pretty nasty, is it not? Since the in essence, since the IPO. So the IPO, IPO is not an all-time high. Didn't even match any kind of all-time high or anything with regard to our market, but it did make a move all the way up into, how about that? Basil's round number high, $120, $120 even Steven move to the upside. It's completed a 1 to 1.618 A to B equals CD to the downside. Off of that level, it's been traveling sideways. Looks like we had a nice little hammer candle out here, May the 5th. Sideways action yesterday, and a nice gap up with pretty good volume so far this morning. Now, the question is going to be for this equity, can it get through a supply line that had 76 million shares? That should act as resistance, or the resistance area. So real resistance on Alibaba, and probably where it's headed to. Boy, it likes even numbers, does it not? $92 even Steven on January 30th. So it looks like that's where it's headed to. Trading right now at 87.60 or so. That is Alibaba. Now let's go back. Let's go back and take a look at those. We're 17 minutes away from 10 o'clock. But let's go back and take a look at those 120-minute time frame charts. I'm telling you that they're the key out here today, and the levels that you want to be watching. So upper left is the ES Mini. Upper right is the NASDAQ out here. So they've all confirmed the buy, the D point out here. So if you are short, make sure you have your stop in place somewhere. Identify a price target where you're going to be willing to give, what you're going to be willing to give back and still stay in. Or if it's a positional trade, that's a different thing. I want you to understand what the market is likely going to do out here. And so let's go take a look at the NQ, because we only looked at the ES and the Dow futures out there. But in essence, in the Dow futures, just to give you an example, I'd have to go to the daily. We must be up, even though if I just take a look at the futures, it says we're up 19 points, but we're up probably about 175 or more points from yesterday's close out here. But nonetheless, let's go take a look at those 120-minute time frame charts. Let's go, and here's what I want you to notice, and this is where we're going to be paying attention. Well, we're going to take a look at the upper left, the ES mini resistance 2087. That's going to be your first area to give you a piece of information as to whether that's assuming they can get up there. So it's only 2076. It's got a ways to go. It's got 11 points to go. Nasdaq is going to be the first one up to test resistance. So perhaps it's from the Nasdaq. So let's go focus on that we really get our piece of information. Now, its resistance area is going to be 4406. And if it can clear 4406, that would be strong. Now, it's got the A to B equals CD pattern. That price projection was 4434.50. It's got more than that, but that's one of the patterns that I'll share with you for the moment. It's got two other that are like, wow, does this really happen? And the answer is, yeah, it does really happen. That's at 4332.50 versus the price projection of 4334.50. God, you gotta love that. You gotta love that lightning bolt pattern out there. And so nice bullish engulfing candle. We're having some follow through out here. That says we've got really one of 5 outcomes in place that we would use for price projection for this pattern. Those outcomes being, well, first we're going to use our market profile because it's so close to the 0.382 retracement level. So the 0.382 retracement level, often referred to as the dead cat bounce out there, takes you to 44.17. So 44.06, 44.17 ought to be pretty stiff area of resistance. If, in fact, the NQ is able to take that level out, that says we ought to see price rise up to about 44.70. That's your 0.618 retracement. That is a normal move inside any kind of a pattern out here. Oftentimes, it would be the beginning of the next A to B equals CD pattern to the in this case here to the downside. Likewise. Okay, and that is if the lows get taken out, and the lows right now inside the NQ are 43.32. Let's go see what that actually means. So that we look at both sides of the trade out here. Well, you already know what I'm going to tell you, don't you? If that area gets taken out, what you ought to consider is that price would move down into the 42.70 level. Why 42.70? Because that is the area of our consolidation, our 200-point consolidation, which the NQ busted out of. Looked like it was going to be a real breakout. Turned out to not be a breakout because price came back in, tried to get out, couldn't get out, stayed inside there, and then price pulled back this morning and yesterday to test the bottom of its TAS box out there at the 43.70 level. So any close below this morning's low, we're likely going to see a route down to the 42.70. Otherwise, what we're going to see is we're going to see a bounce. Now, 44.73 is also another key area. So as we switch back and we take a look at the 120-minute chart out there, I said 44.70 was your 0.618 retracement, and 44.73 is the top of the over longer-term consolidation. You'd have to say that if we see a clearance of that 44.17, that's the number to be looking at, 44.73, where you would make your next decision. Let's say that you're not short and you wanted to get short after yesterday's action the day before. What you ought to be doing is preparing for that trade at 44.73. And then when you don't take it, because it's like a deer stuck in the headlights, if you'd like to understand why you didn't take that trade, what you should do is come on over to the homepage at TFNN.com and sign up for my workshop that I'm giving this evening, which is really about the psychology of trading. Because the reason that you don't take a trade, or you don't enter a trade, or you don't take a stop, or all those different things, it's a pattern that is unique to you. The cool thing is I'm going to teach you about the patterns that are unique to every individual that attends that workshop. I'm going to provide you with the tools, and I'm going to assist you however it is that you decide I can best assist you in doing that out there. But each of us have patterns. In fact, each of us have, we have one of 720 different patterns that are truly available to us. That's why it's no cookie cutter approach. But what we spend a lot of time on, what I do for a couple hours a day, nearly 9 hours a week at least with each of you, we take a look at these different patterns, and we don't get too caught up emotionally into what the markets are doing. Instead, we go take a look at these patterns that we know work with high degrees of probability to help us answer why price is doing what it's doing. But if I've learned any one thing in life, and it doesn't matter whether it's price or whether you're losing weight, whether it's your relationships, whether it's your economics, your wealth out there, is that there's only one thing that gets in the way from you attaining what you want, and that's you. That's your own psychology out there. So I'd love to be able to help you. Come on over to the homepage at TFNN.com. It's this evening from 6:30 to 7:15. Don't worry if you can't be there, because it'll be archived on your members page for the next 30 days. Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Flat market out here right now. Dow's off 8, S&P is down 2, Composites off 9, Russell 2000 is off 80 cents. So very flat market. Our parameters for the day, they're really well established. That makes it very easy to trade, or at least know what the market is communicating to us. We know that the lows of this morning are going to be critical. Inside the ES-mini, it's 2,057. Any move below that, and the route to the downside continues. Inside the NQ out here, it's any close below 43.32. That sets up that run to 42. 42.70. Right now, the message is just simply that we've got a bounce that is underway. And it'll become more than a bounce if on the ES Mini it can take out the 2087 level. It'll become more than a bounce if the NQ can take out 4406. The NQ should be the first one up to that level to let us know if this is more than just a bounce, meaning that price inside the NQ would get above 44.17 on its way to 44.70. So we have really well-established parameters because the price is traveling with inside their market profiles out here. It's also confirming that when we take a look at the VIX index. The VIX index right now is trading at 1562. That's well above its 50-day exponential moving average. That's 1429. If this is more than a bounce, you're going to see the VIX index get below that level of 1429 out here. So that is what's going on in the indices. That's going on inside the VIX index, inside the summation index. We'll spend more time on this during the next hour out here. And it really is going to be the composite that's going to give us our next clue out here because its price oscillator so far is a little bit of a rising price oscillator. So we'll pay attention to that. New York Stock Exchange is extremely oversold. It's at that extreme oversold level. So the market ought to bounce, whether it is right now, and the pattern suggests that it is now or that it was earlier this morning. And if it doesn't happen, that just sends off a more serious message, in my opinion, as to what the markets are doing. So, folks, come on over to the homepage at TFNN.com. Sign up for the workshop. The Psychology of Trading begins this evening at 6:30. Look forward to seeing you there. Stay tuned. Tom O'Brien's going to be up with the Market Minute, and then I'll follow that up with the next hour of the Trader's Edge. If you're off to start your day, have a terrific Thursday as always. Thanks so much for joining us here at TFNN. Have a great day. Look forward to seeing you soon.